Welcome to Wise Beyond Bitcoin, your home for the crypto neo news, education, and opportunities, and your home for the macro updates. My name is Ryan.
My name is Lucas. And speaking of macro updates, we like to bring you the breaking latest in what's going on in the economy. Of course, that deals with the Fed, with the job, the labor market, how that will impact rate hikes. And we've got some news for you in that. So without further ado, Ryan, what did you find, brother? And what does this mean?
Yeah. Well, today is the day we've been waiting for the labor market update. We're looking at the private employment data, non-farm private sector employment, and the number that came out for August is there's been 132,000 jobs that were created. Now, that's notable in light of what the expectation was, which was around 280,000. So we're looking at less than half of what was expected. So yeah, the big narrative here is that we're seeing labor markets make a turn, and they've been very strong. Hiring has been very robust. It's been, over 200,000 jobs we created in July, and so the expectation is that that would, potentially continue. But we're seeing some weakening happening month to month, and then that picked up pace between July and August, and as you see, the big drop off in job growth. But even still, pay is up annually at 7%, over 7%. So there's still some strength in labor markets. I mean, we're still creating jobs, but just to say that the trend is now changing, that's the big
Do you
takeaway
think
from this.
Do you think that this pay increase that's being measured may be more nominal than real because of all the inflation? So it may be more of a reveal in the
Well, I
inflation,
think I think
raise of
it's hard to say because they
prices,
tend
not.
to they tend to adjust that stuff, in real terms to get those rates. Because you're right that if it was just in nominal terms, that wouldn't really tell you a lot with 9% or 10% or whatever the inflation rate is today. So
Well, they may,
I
because
would,
it may be an average of if they're saying $11, $12 at this point.
yeah.
I can't say that they've taken too much, considering a lot of the inflation that's being happening right now is just now being measured.
Well,
It's
it would
very
depend on
possible.
how well you think they can discount inflation.
Yeah,
If you think that that is a accurate discount or not, you know.
it'd be interesting. But regardless, there surely is an impact in the rise in overall prices and the rise in the price of labor. And so
For
there you
sure.
go.
Yep.
Um,
Now we
and,
actually
and
have
as
the report we can show. This is the actual. So we had a blog post about it, but this is the actual report. We'll link this below. Gets into the details by sector, what the labor market looks like, and for example, natural resources, construction, manufacturing, or we can look at the service side of it. That's where the job growth seems to be the strongest right now in the service providing industries. Your transportation, financial information, education, health, business, hospitality. These are the sectors that are supporting the economy at the moment, and very weak. It's been weak, kind of on the goods producing side, manufacturing. That's been weak in these last few weeks, and we're going to have later on a video on Chicago PMI data, which gets a little more into the details about manufacturing. What do we know? What do we learn today about that? But that's another video, so we won't get off on that. But so if you're curious about regional or by sector, you can kind of dig into these numbers, get a better view. It'd be interesting to look month to month to see, you can get the July numbers and see what were the service industries doing then, and what is it slowing or not, and where is the slowdown happening? That'd be an interesting comparison. But all in all, that the narrative here is that this kind of reduces the risk of the Fed raising rates faster and harder, increasing the pace of rate hikes to maybe 1% a month. Like, that's off the table, I would say. The question now is, will it be a 0.75%, or will they reduce it down to a 0.5% because of the slowdown that we're seeing? That's a good question. But I will go back to what the Fed has been saying this whole time. They've made it very clear that their goal is to defeat inflation, even if it means imposing pain on the economy and imposing a slowdown. They're fully aware that that is a part of what's going to happen. That's an effect of their policy, and they're doing everything they can to seed expectations that that will happen, and to to not think that they're just going to give up the goal the second markets turn, that they are committed, and they've made that clear in a way that they normally don't make things so clear. So I would say that we're probably just seeing the beginning of this, and that I wouldn't be surprised if the Fed continues to hike rates even into labor market weakness. And and the effect of their balance sheet reductions, which we're going to do another video on as well, that hasn't really set in yet. So in many ways, this could be kind of like the beginning of a recession, of a slowdown period that starts to accelerate as the balance sheet effects take hold, as labor markets continue to slow, as manufacturing and business investment continues to diminish. These things will take, there's lags in macro variables. It takes time for these things to play out, for demand to respond to what's happening with business hiring, with inventories. Like, these things will take time to ripple out. So, it's, along with the Fed, being midway through their policy shift, it's very clear to me that we're probably going to see some further downsides, and not just in hiring, but in financial markets as well.
I'm glad you mentioned the balance sheet reduction again, because it's good to know when you're focusing on the right hand, also what the left hand is doing. And these rate hikes don't tell the full story. In fact, this is the first time there's been news about the job market slowing down. So in many ways, this can be a reason for them to continue what they're doing, but like you said, at maybe a more modest pace. But to say that we're just now starting to see these effects, so we still have room to continue doing what we're doing. Now, if they come and say we're going to do just 50 basis points or a little bit less, and that rings as good news to people in the short run, it's important to understand what they're doing with their balance sheet, because there will continue to be a lack of liquidity and a change, or a real change in the ability for markets to expand beyond the interest rate that the Fed sets.
The target.
So
another way to say it is that the effect that these policies are having on interest rates, and especially in the future, are not limited to just what the target is through the Fed's announced, they're targeting they're going to raise rates of 0.25% or 50 basis points or whatever. Their interest rate targeting policy is not limited to just that one effect. There's also the effect that the balance sheet changes are having. So they could say, we're going to sell off so much of these assets, and that could have more of an impact on interest rates than what their announced target is going to be, right? So there's more going on here with interest rates than just one pathway, one policy path, right? So to look out there's tightening happening on that other side, right, that we need to focus on and take account of.
The good news is that this really aggressive action that's being taken, both with the balance sheet and with the interest rates, it is having a real effect, and it will. The more aggressive action you take in the beginning will allow for a quicker return to growth, and a return to that, I don't want to say easy, cheap money, but at least easier.
A bull market, right?
A bull market
sentiment, yeah.
And so that's why we cover these long-term outlooks. It's educational content. Of course, this is not financial advice or commercial advice or legal advice or marital advice. It's just research, education. We're sharing our love of economics and markets and this new technology called blockchain and crypto, which is often impacted and definitely connected to the economy at large. And as a tech market, we definitely see it impacted by the economy worldwide. And this is going to last. We've talked about this pretty much since the beginning of the Fed's announcement, and you could say the beginning of the end of the last bull market, although covering content before then. And we'll continue to give you the updates. So subscribe, notification bell, all that good stuff. Like if you like to be up to date on this information and these nuanced perspectives to give you a better understanding of what to prepare for. And that way it's not, there's no stress in what's going on in the world. You know, it's like the tides ebb and flow. You breathe in and out, and the markets, when they pump, this has just been the cycle of the economy, the nature of the Fed and
That's right.
interest rates. And so there sometimes there's a time for a contraction. We're there. And I would say if the Fed's talking about continuing to reduce its balance sheet for another year, maybe close to, who knows, but at least for the time being, and also raise interest rates for a continued time, we're probably looking at, I mean, another 6 months to a year, I would say,
Yeah, if not more.
if not more. We'll continue. It'll depend when we start to see a change in the policy announcements and the policy action. But this is where the opportunities are. It's a great time to do your research and to figure out who is building, what markets are still developing and growing and adding value to the economy. Where is that value shifting? Where do you see people having job market growth? Where is that happening? And in blockchain and crypto, we'll continue to find those
Yeah.
opportunities.
I wanted to point to this website for a handy place to get your news about mainstream financial markets, whether it's inflation data or job growth, job market data, or what the stock market's doing. What are people trading on? What's the story of the day? This is a good website for kind of cataloging some of those resources, and we'll have that in the description. And
Dig
beyond
it.
that, another handy resource are these playlists that we've put together. Lucas will talk about that a little bit.
I sure will. We've got playlists on if you want to get involved in blockchain and crypto and learn how to download a Web 3.0 wallet and send and receive and stake and different blockchains and what they mean. We've got how to start your crypto journey. We definitely keep you up to date on Secret Network because it's the leading privacy by default blockchain with applications, major applications of value built and functioning with revolutionary NFTs that can do everything Ethereum NFTs can do and other layer ones and more. However, we also stay abreast of what's going on in Ethereum. There's the merge coming up and the move to proof of stake, as well as other adoption news to layer 1 and layer 2 protocols. So check out our playlist. We'll continue to add to them. And yeah, subscribe, notification bell if you like that stuff. We appreciate the love and support. Until the next time, have a beautiful day and namaste, y'all.